Welcome back to Morning Markets on Monday the 5th of September. Today we'll find out who will be the next Conservative leader here in the UK. Rather than trying to second guess the outcome, we will provide a more detailed review of the results tomorrow on Morning Markets. Today I wanted to focus on the key market moves from Friday, but also importantly look to the week ahead. The key takeaways on Friday, we had the pound, which continued to weaken relative to the US dollar. Why was that? Well, given the uncertainty over who will take the reins of the Conservative Party and the expected impact on government spending and therefore government debt levels at a time in which borrowing costs are rising, it provided some volatility in the backdrop. This weaker pound provided a tailwind, positive for UK top 100 listed companies, of which the majority of earnings are generated overseas. European equity markets were strong. They were led by German markets, which had a strong finish to the week, led by the material and the industrial sectors. What was the reason behind that? Well, in the US, we had some data which signalled that the US labour markets, which have been running extremely hot, were starting to cool at the margin. This therefore potentially moderates the expectations of how central banks in the US will respond by way of raising interest rates. This washed through in terms of the expectation for Europe, therefore potentially reducing pressure on the European central banks to raise as aggressively as the market is currently pricing in. Some of the steam has, however, came off the European stock market this morning. Key reason behind that, Nord Stream 1, which is one of the key natural gas pipelines running under the Baltic Sea from Russia to Germany, supporting around 1/3 of Europe's gas supply, was closed at the latter part of the week for a period of scheduled maintenance. This was expected to be reopened over the weekend. However, this didn't happen as planned. Gazprom, which is one of the biggest state-owned gas enterprises in Russia, reported gas leaks and therefore required to repair those with an immediate effect. And therefore there is no scheduled date in which the gas pipe will be reopened at this stage. This creates a problem because Europe are trying to build up their gas supply levels ahead of the winter. This morning, we've seen a 30% spike in the European gas prices already so far. And over the weekend, the German government unleashed a €65 billion package to support business and households in response to this challenge. These are important developments and we'll continue to keep you up to date on these throughout the week. The US market will be closed today for Labour Market Day. However, in addition to the topics discussed, as we look forward into the week, one of the key areas which we'll be focusing on is the meeting of the European Central Bank on Thursday. Here the markets are expecting at least a 50 basis point increase in interest rates to cool demand and therefore moderate the inflation print rises which we're currently seeing. Estimate levels are demonstrating that inflation is running at around 9.1% year on year in August, and therefore the central bank need to respond to this. But it will be really interesting to see how they build in the gas price rises into that picture and their expectations. We'll continue to bring you up to date on these developments through the week. Please do tune in to Morning Markets. Thank you very much for watching.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.